I Googled Satoshi Nakamoto, trying to figure out who he, she, they are. I guess self-proclaimed he once in an email, but we don't know. I think it's 4 people, but that's just my opinion. But when I Googled Satoshi Nakamoto, what came up was Intelligence Central, because the surname Nakamoto is from the central provinces of Japan, and Satoshi means intelligence. And I went, whoa, that is too close to CIA. And then I started thinking, holy shit, wait a minute. If I knew that my currency was destined for failure, which, right, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. All the others are down 98, 99, 99.9999%. So if I knew my currency was toast, I had a spending problem, I was just going to issue a lot of currency like we did in 2000. What would I do? Well, let's see. I could convince people to turn it into something else, and then I'd have a back door. What are they trying to do? To answer your question, what are they trying to do? They're trying to create fear and distrust, not just of crypto, but of banking. Well, wait a minute. If you're the banks, why would you want to foment unrest about banking? Oh, because you want people to be so afraid of keeping their money in the bank, they move it to the Fed.
Banks are crashing, and everyone is starting to panic about what to do with their money. Bitcoin, more than ever, is becoming the safe haven solution. Yet, some theories say banks are behind a master plan to destroy crypto and do everything intentionally. In today's video, we will have Mark Yusko talk about these theories in a way we haven't seen before on this channel. And some of these do make sense, so pay close attention until the end and let us know your thoughts in the comments below when you finish watching. First, aren't these banks collapsing, similar to what happened with FTX and Sam Bankman? Were they part of this evil plan?
I'm sorry, Sam and Caroline are the masterminds of nothing.
Yep.
Masterminds of nothing. Zero chance. They were she was not a trading genius. You're a trading genius. You're a documented trading genius. She, not a trading genius. No, was not doing it. And it's kind of like when they called Madoff a hedge fund problem. There were 2 problems with that. There was no hedge and there was no fund. He literally hadn't made a trade in 13 years. Because if he had, then he would have been everybody's biggest client if he had that much money doing index arbitrage, which he was not. And there was no fund. He literally would have his brother-in-law transfer the money into his personal account. He just stole people's money and lied. So that's not a hedge fund. That's a fraud. And he went to jail. Here's the crazy thing. The day after he admitted to his son that it was all a fraud, he went to jail. And he died right up the road here in Butner, North Carolina. Okay, and then it's, maybe he didn't die in prison like everybody else. No, I actually it's a funny story. I met his prison guard on a plane. He was coming back from a conference. He didn't know me from Adam, right? And we just got chatting over cocktails on the plane. And he told me some amazing stories about Bernie in prison. But he actually helped the guards with their personal finances, which is kind of wild when you think about it. But Sam and Caroline were pawns in a very elaborate game that's still going on. And so he asked the question. So Mark, answer the freaking question. Were the bank runs intentional? I'm going to say, yeah, I believe they were intentional. And why? Why would you foment a bank run? Isn't all of banking reliant on confidence? So if we lose confidence in our banks, what happens? We panic and we take the money out. Wasn't that bad? Well, it depends. If you're trying to run a bank, it's very bad. Why would you want a bank run if you're a bank? Well, the bank run's not on JP Morgan. The bank run's not on Bank of America. The bank run's not on, Wells Fargo, the big dogs. The bank run are on the small banks, and God forbid you were friendly to crypto, kind of like the attack on banks that banked cannabis, kind of the same thing, or porn or anything else. If you're on the wrong side of the government, illegal drugs versus legal drugs, right? You can sell, a way more addictive and way more deadly drug if you're Purdue Pharmaceuticals, because you paid the government enough. But geez, God forbid you try to sell weed on the corner. I mean, you go to jail for a long time. Crazy stuff. So as long as you're on the right side, great, but if you're on the wrong side, bad. So what's happening is, if your plan is to weaken the foundation of trust in this alternative to banking, right? One of the mantras of Bitcoin is unbank yourself, right? And that we're going to bank the unbanked. 40% of people, 40% of adults in the world don't have a banking account. Just let that one sink in for a second.
Oh, yeah.
That's almost 3 billion people don't have a bank account. They have a cell phone, and they would very much like to have financial services, peer-to-peer lending, earn interest on their assets. And with digital assets, with crypto, with Bitcoin, you can do all of that. So you got to slow that down. Oh, we'll ban it. How do you ban a decentralized thing? Remember when Zuck had to go testify to Congress? The joke, going around Twitter was, well, they subpoenaed the CEO of Bitcoin, but they were unavailable, right? Yep. So they're going to subpoena. And the reality is, what you're trying to do is create the illusion that is only used for terrorists, drug dealers, bad stuff. Now, the funny thing is money laundering. I used to laugh that, Ms. Warren et al. Were like, crypto is only used for money laundering. Like, no, money laundering is done the way I described earlier. I leave a backpack of cash. Yeah. In many cases, counterfeit $100 bills, and I commit bad stuff all around the world. That's how it gets done. Remember the $2 trillion? It was $2 trillion that went missing before 9/11.
Yep.
So we know that most money laundering is, but one thing I didn't realize, that these people know that crypto is being used for money laundering because they were the ones doing it, right? I mean, we know. See, look, if you didn't want to get caught, why would you have the Ukraine government send money on chain to FTX? On chain, right? I'm not hypothesizing. I can actually see the transaction. So then it goes from FTX to Alameda, again, on chain. Then from Alameda to a company whose only owner is Sam Bankman-Fried, right? And a website that doesn't work. And then from there into a Democratic mixer.
Wow.
That's money laundering. I mean, if you opened up the definition of money laundering, that's what you would see, a picture of that. So I didn't realize that they were expert in insider knowledge. So yeah, fine. Some small percentage is used for that, but just like some small percentage of, banks do bad stuff. Here's a great stat. The fines paid by the big global banks. Okay? The fines, the admitted fines where they said, yeah, I'm guilty, money laundering, bad stuff, I'm going to pay, is 80% of the whole market cap of Bitcoin. It's almost $400 billion.
Crazy, right? What if bigger banks and the government are crashing the markets on purpose? But wait, there's way more to this.
Valley Bank went down to zero. Signature Bank went to zero. JP Morgan fell like 20%, and Bitcoin went up 20%. It didn't go up. Just one subtle point. Bitcoin didn't go up. One Bitcoin is one Bitcoin.
Yeah.
What happened is the currency went down.
Yeah.
The dollar went down.
Or the confidence.
And this is a really important point, because what the Fed did in the last 2 weeks is they reversed 2/3 of the QT in 5 days.
In the last year, yeah. Exactly.
People say, well, that's not the same. They didn't print more money. No, but they took government bonds onto their balance sheet, which further concentrates their ownership of government bonds, which means they will have to do further liquidity provision, and money supply growth is likely to go higher, which means the dollar fell, and the dollar did fall, particularly versus strong things like gold, which went up a lot, and Bitcoin, which went up a lot, and the renminbi, which went up a lot. And so, yeah, that's. But what are they trying to do? To answer your question, what are they trying to do? They're trying to create fear and distrust, not just of crypto, but of banking. Well, wait a minute. If you're the banks, why would you want to foment unrest about banking? Oh, because you want people to be so afraid of keeping their money in the bank, they move it to the Fed.
And did you know about this?
Every Sunday since 1987, actually early 1988, so it was the January 1988, it happened after the 87 crash. Every Sunday, the Council on Economic Stability meets, the head of the Treasury, the head of the Fed, and the 4 biggest banks. Okay, they meet. And that's why every big thing that's happened in financial services in the last 35 years happens on Sunday night. When did Bear Stearns get taken over? Sunday night. When did Lehman get taken over? Sunday night. When did Washington Mutual get taken over? Sunday night. When did Wachovia Bank get taken over? Sunday night. When did Silicon Valley Bank happen? Sunday night. Signature Bank, Sunday night. That's how it works. And here's the problem. The Fed, the Federal Reserve, is neither federal nor does it have any reserves. It is not a bank. It is a private corporation owned by the banks and a handful of very, very wealthy European families. It was created by the same people that created the original central bank in the Netherlands to finance wars, to take over France so they could have the world reserve currency for 70 years, right? After France took over Spain, which took over Portugal. And then half of the family moved to London and set up the Bank of England. And because they had the steamship and they had a better navy, then they took over the Netherlands and got the world reserve currency. And the sun never set on the British Empire. And then because of Oppenheimer, big movie that just came out, we had nuclear submarines and we became the most powerful navy. And we became the world reserve currency. And now they see that it's threatened. And why is it threatened? Well, mismanagement. All empires fail. Every one. There are no exceptions. Name an empire that stayed around. There aren't any. And the American empire is falling.
If some of Mark's claims are true, it would explain much of what's happening. Could this be a master plan created by the Federal Reserve or the government to gain trust again and save their empire? And this theory is even crazier. Check this out. What if Satoshi Nakamoto is the CIA?
But to answer your question, I Googled Satoshi Nakamoto, trying to figure out who he, she, they are. I'll guess self-proclaimed he once in an email, but we don't know. I think it's 4 people, but that's just my opinion. But when I Googled Satoshi Nakamoto, what came up was Intelligence Central, because the surname Nakamoto is from the central provinces of Japan, and Satoshi means intelligence. And I went, whoa, 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 that is too close to CIA. And then I started thinking, holy shit, wait a minute. If I knew that my currency was destined for failure, which, right, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. All the others are down 98, 99, 99.9999%. So if I knew my currency was toast, I had a spending problem, I was just going to issue a lot of currency like we did in 2000. What would I do? Well, let's see. I could convince people to turn it into something else, and then I'd have a back door and I'd just steal it all back. And so I was a little freaked out about that for a while, but it's cool. So Scott Stornetta, who is one of the co-inventors of blockchain technology, is one of the fathers of, or not fathers, he's one of the progeny of the early cypherpunks, but he's a punk. He's a cryptographic progenitor, and he's cited 3 times in the white paper. So in the footnotes, if anyone actually reads the footnotes, you'll see Scott's name there. Scott's a pretty smart guy, and he's a venture partner of he's a venture partner of ours, advisor. And so I asked him this question, and well, I should tell you one other funny thing. So the first question I asked him was, like, Scott, you were kind of there at the beginning. So I know you don't want me to ask, but I'm going to ask because everybody was going to ask you. So do you know who Satoshi is? And he starts speaking Japanese. And it goes on for about a minute speaking Japanese. And we're like, okay, Scott, what's the joke? He says, well, if you knew Japanese, you would know that I just said that, yes, I was there around this group of people, and that perhaps I could know who Satoshi is.
Wow.
But if I did, I sure as hell wouldn't tell you. And if you understood Japanese, then this would be funny. But you don't speak Japanese, so now I have to tell you. So that was funny. But I said, could this be true? And he went, huh. I mean, literally grabbed his chin like this and said, huh. You know, I hadn't thought about it. No. And that fast. It's like, no. I'm like, what?
Then you could
And
sleep.
he said, well,
Yeah.
he said, the way Bitcoin works and the way proof of work functions, it's not possible to have a back door because of the air gap. And it was the first time I heard the appropriate use
Air gap.
of the term air gap. And so that was cool. And I felt more comfortable about that ever since.
Now Mark also explains Bitcoin and the overall perception of it and how banks will also own it.
Bitcoin is, we've already had the original kind of variant perception and catalyst, because we're a third of the way in. So if you think of an S curve, right? The first 10% happens over the first decade. The first 4 years don't really count. That was like a science experiment, and they were kind of getting things, but the last 10 years they count. The next 10 years is the 80%. That's where you're getting from, early adopters to super majority. And then the last 10 years is the maturity. So it's a 30-year S curve. So today, the consensus is, governments are going to shut this down. They're going to resist it. It's never going to be more than a novelty, and a bunch of nerds and geeks go have fun with your magic internet money. Okay, that's consensus. The variant perception is Bitcoin is digital gold. Okay, it's a scarce asset that exists in the absence of a liability. Therefore, it is money. It's superior to gold because it's more divisible and more portable.
Yep.
Right? If I had a bar of gold here, I just watched The Italian Job on the plane home the other day. I love that movie, so good. And beautiful bars of gold with the Balinese dancer, and they stole from the Medicis. Bad. Don't want to get them mad at you. But if I had one, I'm not strong enough to break it in half. Even if I could, so it's not very divisible, I couldn't stuff it into the computer and send it to you. So it's not very portable, where I can send you a couple clicks, Bitcoin, easy. So I believe the variant perception is Bitcoin will replace gold as the base of money, and that every central bank will own it. Every human that wants to be diversified away from fiat will own it. Well, but Mark, that means you think fiat will still exist? Of course I do, because governments aren't going to give it up. And so fiat will evolve into digital, not crypto, because crypto is a decentralized currency. Digital is going to be centralized. So all the bad part of fiat and programmable and quick. It's going to be ugly. But I think they're going to try it. And so the catalyst for the overarching adoption of Bitcoin, I believe, is the launch of Western CBDCs. So we've already seen the launch in China. And then the time frame is 24 to 36 months.
Want to see part 2 and what Mark predicts to happen in the future with the network adoption and Bitcoin's growth? Let us know in the comments below along your thoughts on all these theories. Thank you for watching. See you tomorrow for more Daily Crypto.